Today, we released a paper on small business taxation, and it blows up some of the myths that we keep talking about. And it does provide some important new analysis about how the tax system impacts on the Canadian economy via the kind of tax reliefs that we give to small businesses. As we've seen in the last election, there's a lot of myths about small business taxation. Some people say that they're responsible for most job creation in Canada. Others say that corporate tax cuts for small businesses are much more effective than cutting taxes for large businesses. And then they kind of picture these small mom and pop owners of small businesses who are struggling to make ends meet. The trouble is that we really have very little evidence about any of these claims. Specifically, I want to deal with two issues. First, the wall of taxation. This is what I mean. If you're a small business and you're operating with just a few assets, like $1 million of assets, you pay a certain amount of personal taxes on capital gains and dividends that you derive from your small business, and your small business also pays a certain amount of corporate taxes. And generally, those taxes are not too high, but as you try to grow, because of the progressive nature of the tax system, you end up paying more capital gains taxes. You also pay more corporate taxes, especially once you become big enough that your profits are more than what's eligible for the low small business tax rate. And in fact, later on, as you get even larger, you might exhaust the availability of the lifetime capital gains exemption that provides you relief from paying any capital gains taxes. What that means is that the tax system deters growth by small businesses. There's a disincentive for them to grow. In fact, what we show is that the effective tax rate on new investment almost doubles as they grow larger and become medium-sized businesses. Canadians are going to be surprised by the issue of loopholes, because we don't often think about small business owners as being relatively rich. But if you can get $400,000, $500,000 in profits that are taxed at a low small business tax rate, you can get a very significant benefit by converting personal income into corporate income and being taxed at a much smaller rate. Here's how this works. For example, I could be a professional and I could get consulting income. And if I was unincorporated, I would pay taxes according to the personal tax schedule. And here in Alberta, the top rate is 39%. But suppose I form a corporation and I leave the money in the corporation. I don't need to take it out as cash. I can instead pay a tax of 13.5% on that same income. That is a very significant benefit to me if I form a small business corporation, which perhaps explains why so few small business corporations actually grow, which has been shown in a study done about 12 years ago. As a result of my research, I want to make the following recommendations to governments in Canada. First of all, avoid cutting small business tax rates much further below the large corporate rate. But probably better is to completely revamp the small business tax incentives. Ones from keeping small businesses small to others that actually help them grow. And for example, we suggest a policy that's been used in the United States of providing capital gains tax relief for small businesses when they first do their initial public offering and they become a large business that way, and getting better access to international markets and stock markets in general. We also recommend expensing of capital up to a certain limit. That would primarily help small businesses, but that's a much better way because you're helping small businesses with their investment costs. And good tax policy, we have to remember, is one in which helps grow the economy, helps with job creation. In fact, a Bank of Canada study showed that one of the reasons that Canada has a lower rate of productivity compared to the United States is that we have many more small businesses compared to the US. And that's because our current system actually encourages businesses to stay small or break up to remain small and not take advantage of the economies of scale that is really important in order to get them to have lower costs of production and be more competitive in international markets. Thanks for watching. I'm Jack Mintz, and this is the School of Public Policy.